Well, good morning, everyone. Thank you for joining us today, and welcome to our second installment of our series for small credit unions. We have 4 different speakers today, and if you missed the first roundtable event, please contact either myself or Dean for a copy of the recording. And take it away, Dean. We are recording this so that if someone was not able to watch it live, then we will have a copy for them as well.
All right. Thank you, Christine. So our first presenter today is going to be Kyle Whalen. He's a sales leader focused on driving credit union and bank success through strategic partnerships with credit bureaus. His collaborations have transformed data insights, streamlined processes, and elevated customer experiences, making him a catalyst for innovation and growth at NCC and in the financial industry. Kyle, National Credit Center is a longstanding partner with Equifax, Experian, and TransUnion, and over the course of nearly 3 decades has become the largest provider of consumer credit data. NCC actions roughly 50 million credit pulls annually on behalf of their clients and is an industry leader in providing credit compliance and security. Kyle, the floor is yours.
Thank you, Dean. Just wanted to welcome everybody who's able to join today's webinar. This is our second one since our recent partnership with CCWA. So we're very excited to keep getting the word out about who we are, what we do, and specifically why credit unions should lever NCC for credit pulls. So I just want to, before I get started, can we see my screen? Is it up running with the slideshow on the left? All right, great. So appreciate you, Dean, for the intro. Just to reiterate, my name is Kyle Whalen. I am the Director of Lending Sales here at National Credit. So just to kind of dial it back, for those who are not aware of who NCC is, we have been a longstanding bureau partner of nearly 30 years, and we do roughly 50 million credit pulls per year on behalf of our clients between all 3 bureaus. That results in us being the largest provider of consumer credit data, and we act as a channel partner in the auto and lending verticals. Our volume and relationship with Equifax, Experian, and TransUnion enables us to provide preferred pricing in addition to an array of value-add services. We pride ourselves in being a trusted partner who can provide critical insights to lenders to help you grow business while simultaneously reducing operational expenses. So we do a ton of things aside from just reducing what you spend per credit pull. We assist with FICO updates, reporting assistance. We can provide a full suite of compliance solutions. So MLA, OFAC, the work number, pre-screen solutions, etc. The list goes on. Anything that the bureaus can do, we can do themselves. We should really be treated as an extension of the credit bureau when we exist in the channel that is small to mid-sized credit unions. So all NCC clients have access to our own proprietary portal called NCCDI. If you're familiar with logging into the bureau's website to action credit pulls, it's the same deal. However, in NCCDI, we offer proprietary views of credit reports called Clarity. I'll show you that in just a second. We have 24/7 US-based customer support, and behind us exists a team of enterprise reps at all 3 bureaus to better support us and you as a client. So what does that Clarity report look like? If you're logging into our portal, this is what it is. All the good information, color-coded, snapshot at the top. You can have multiple scoring models with a smart default to auto-trigger certain actions. We color-coded and put all the red flags and alerts at the top. And then as you scroll down, it becomes a traditional credit report in HTML format that you're probably familiar or looking at. So what does working with NCC look like? Well, for starters, there's absolutely 0 changes to your processes. So what we do, we supply what's called that Bureau Subscriber ID code, and that gets placed directly into your LOS or core system. You continue pulling and reporting like you always have been. NCC is not here to supply you with a widget or change your internal processes. Again, we are kind of this in-between for the bureaus and the credit unions to supply that Bureau Subscriber ID code. Now, I understand that this is kind of geared toward the smaller credit unions. So if you by chance do not action credit pulls through an LOS or core and are going direct to the website, again, we have a solution in place for you, and that is absolutely no charge. So I know that's a relatively short snapshot of it, but that is indeed the 30,000 foot overview. I'd welcome anybody to get in touch with me if you have any questions or concerns. We have preferred pricing specifically geared towards CCUA members. So I would encourage you as a small to mid-sized credit union to reach out to kind of see what the cost savings you'd be able to obtain. My information's up here. I'll leave it up for about a minute. I'll pause for any questions. If anybody wants to toss any out, I can answer live. Other than that, I look forward to connecting down the road.
Yeah, if anybody has any questions, they can either unmute or they can put it in the chat function and I can ask the questions for you. This is great information, and Kyle, did you say that you can do all the credit bureaus? So TU, Experian,
Yeah,
or
we have access to all 3 credit bureaus.
And so if someone just wants a particular one, they can just obtain just one.
100%. Yeah, we're focused on the single bureau pulls. So this is mainly going to pertain to any credit pull or request that's actioned through your LOS or core for the indirect or direct channel. We don't do anything for tri-merge. I'm sorry?
I think someone was putting themselves on mute.
Okay. We don't do any tri-merge applications. We do have a sister company in the pocket for that. So if you're looking for residential lending solutions, you can still get a hold of me and then I can liaise that conversation.
Perfect. Is there a minimum of how many TU pulls that they should be doing a month, or
Nope, we give you a low price. We bill you on your action. NCC does have a monthly minimum of $100. So you know, if you're spending over $100 and you want to look at, you know, what you could be paying, then you can come back to us. Take a look.
Perfect. Well, thank you. Does anybody have any questions?
Great.
All right. Well, I'll stop sharing my screen and I'll hand it off to the next one.
All right. Thank you, Kyle, for that information. Up next is Joe Marsh with QCash. So Joe is a senior sales lead, and he has been 25 plus years in sales and business development. Joe specializes in the credit union industry with a focus on the needs of credit unions. He understands what credit unions are facing today and can direct your credit union in creating the best small dollar lending program for you and your members. And he also apparently rocks on the dance floor. So QCash is relationship-based lending that enables your credit union to help your members when they face financial challenges from life's events. Our QSO lending program allows credit unions to offer small dollar loans to their members anytime, anywhere, on any device. From application to funding, the process is complete in under 60 seconds, and no credit check is required. Joe, take it away.
Excellent. Thank you, Dean. Appreciate the time and the opportunity to talk with you all today. The rock on the dance floor thing, I'm not too sure about, but I'll accept it anyway. So I'm a senior sales lead here at QCash, and I'm going to take you on a kind of a 50,000 foot view to begin with, and then we'll fill in some blanks here along the way. So just as a point of introduction, QCash, we are a QSO, and we offer a fully digital small dollar lending platform that literally goes from application to funding in under 60 seconds via a digital device, cell phone, tablet, PC. And since we use relational underwriting versus traditional credit scoring in the algorithm, those folks that have credit challenges have the opportunity to get the funds that they need when they need them as well. But because we're fully integrated deeply into your core processor, there's absolutely no loan origination staff needed for these loans. So hit you with some kind of high level pieces there. I'm going to fill in the blanks along the way. But first, let's just talk about why it's important getting the funds to folks that have these credit challenges and why it is so important. These statistics come from Financial Health Network Pulse Survey. 176 million people struggle financially in the country. 2 in 3 are considered to be financially unhealthy, and 1 in 10 is considered to be credit invisible, which is to say their credit files are so thin or in some instances non-existent. So to the eyes of the credit world, they are invisible. And to get traditional lending for this group is virtually impossible. 64% of Americans say that they're living paycheck to paycheck. But the kicker to that is regardless of income. So the family earning $30,000 a year or the family earning $300,000 a year is still in the 64% of Americans living paycheck to paycheck. And 40% of Americans say that they would struggle to handle an unexpected $400 expense. So we know that there's a huge challenge out here, and we're pleased that QCash has been able to help these folks in need. Let's talk a little bit about what exactly QCash is. So we are a SaaS platform. We are cloud-based and white label. The platform is fully customizable. You're going to hear me talk about this during the demo, but colors, logos, fonts, underwriting criteria, interest rate characteristics are all fully customizable. And the platform is available anytime and anywhere from any digital device. So literally the member can go from clicking a link to actually having funding available in their account in under 60 seconds. And that is any time of the day, any day of the week, weekends, holidays, branch closed, etc. So again, because of the relational underwriting, we are able to get funds to those folks that have credit challenges. So as I mentioned earlier, we are deeply integrated into your core processor, and then the algorithm reaches in and retrieves these relational data elements in order to do the scoring. So what are we looking at here? Well, we're looking at things such as member eligibility. So how long have they been a member? You as the credit union can determine what that entrance gate looks like. Typically it's somewhere between 2 and say 6 to 8 months that the member needs to have been a member in order to be eligible for the platform, but you determine that. Is the member over the age of 18? Do they have an account in the class that we're using for the program? Almost universally, that is the shared draft checking account, because that's really where the operating income resides for ATM access, debit card usage, checks, and so forth. Are they a member in good standing? So what does their past due loan activity look like? Any adverse actions, red flags on the account, overdraft activity, things of that nature. We're looking at their deposit history because to some degree that's a proxy for their ability to be able to repay the loan, as well as employment verification. And so you can determine what types of deposits would be eligible in the algorithm scoring. So payroll would be the obvious one, of course, that you would include. But things that are one-offs, such as the COVID stimulus payments, tax return checks, Zelle, Venmo, things of that sort, you have the ability to include or exclude those deposits as you wish. And then finally, we're looking at the overall credit union relationship. So what other products and services do they have? What does their payment history look like, et cetera? And so as a result, folks with poor credit, folks with moderate credit, or even those folks with very, very good credit have the ability to have access to the funds that they need when they need them. Okay? So I'm going to pause here for a second, and I'm going to bring up a demo of the platform and show you what the member's experience would look like in this instance on a cellular phone. So again, when I mentioned earlier, everything is customizable pretty much that you see from here on out. So this would be your colors, your logo, your fonts, any taglines that you wish to include, any blurbs that you want to include here. This one shows that it's a small dollar short-term loan for members that have been with a credit union at least 60 days, doesn't credit score, and gives you an instant decision. Now, how the member got to this point was through your digital banking instance, so via your single sign-on. So when the member would bring up their account on their phone, there would be an option for loans. They would click the drop down, and there would be an option there for QCash or zip funds or whatever the credit union wishes to call it. So then when the member clicks that link, they are launched into this screen here. Okay, so I'm going to go ahead and apply. All of this, again, customizable, but you can have specifics as to the loan qualifications, any specific details that you want to point out, interest rates, application fees, whether there's credit scoring, things of that sort. Because we're integrated into the core, if there are multiple accounts that are going to be used for the platform, those could be available and visible. But typically, only the shared draft checking account is used for the reasons I mentioned earlier. That's where the operating income resides. So if that is the only one used, the other options wouldn't be there available. Okay, so I chose shared checking. You'll notice that there are a couple of acknowledgments and agreements that are done via e-consent along the way. So when the member clicks this and hits continue, that acknowledgement is being written to our document storage system, in which you at the credit union have complete access for integration to be able to pull that information from our system into your document storage at whatever frequency you choose to do so. In the event that you need anything for regulatory or compliance considerations or member questions and things of that sort. But know you always have those digital records available to share and to look at if you need to. So I've said, yes, I want to continue. At this point, the algorithm reaches in, pulls those relational data elements that I mentioned, and gives an instantaneous scoring. In this instance, and this snapshot in time, this member would be eligible for a maximum loan amount of $2,000. So we didn't give the member the option of choosing how much they wanted. We extended to them what we would be willing to based on the credit scoring. And we've received feedback over and over again that that's a desirable member experience because they have a good likelihood of being approved for something, as opposed to, in many cases, given if they have credit challenges, completely outright declined. So even though I have a maximum of 2,000, I could choose a lesser amount if I chose to, but I'll leave it there for now. Payment frequency is monthly. This is an optional field, gives the member the option of choosing the first repayment date for their loan, because the account in which the loan proceeds go into would be the account in which we set up an auto draft repayment of the loan to come out of. So you can choose whatever dates that you wish to or not, as the case may be, but giving the member this option, we have found over and over again that when given the chance to choose a date, the member chooses a time that best coincides with their other pay frequencies and or other financial obligations. So being able to choose the date gives them the option of being set up for success right out of the gate. This is an optional field as well. What is the purpose of the loan? You can have as many purposes in here as you wish, but this really is for the credit union's visibility into why is the member getting the loan. So if you see a lot of auto repair loans in the spring or home repair loans in the summer, it gives you the ability to consider marketing a specialty type loan to that purpose at a subsequent date. And I'll touch on what those look like in terms of specialty loans here in a moment. But I'm going to leave it at family emergency. I'm going to continue. At this point, the member gets a fully transparent summary of the loan showing the amount, payment frequency, periods, first payment date, etc. We consider this a best practice, having this in here and actually leaving it defaulted as checked. But this explains what I mentioned a moment ago, that the account in which the proceeds go into, that the member understands that we would be setting up a repayment of the loan coming out of that account from an auto draft perspective. And they click continue. At this point, the only thing that they need to do is to acknowledge the terms and conditions of the lending disclosures, your TILA, if you will. So they have to do one or the other. They can view it. These would be your specific credit union loan documents that we have digitized and populated with the specifics of the loan. So they can view it here. They can email it to themselves. They can do both if they're so inclined. But at this point, when they click, yes, I want to move forward, it is a double opt-in. They click accept and accept again. Congratulations, funding is complete. The 2,000 is in your account and ready to use. And this is literally instantaneous. And once again, I want to point out, this is any time of the day, any day of the week, weekends, holidays, after hours, branch closed. Member can literally go from application to funding in under 60 seconds. But what's happening behind the scenes is really where the power of QCash comes in, because during the implementation, we will have built the loan type known as QCash or zip funds or whatever you want to call it in your core. But during this transactional process, we are creating the payment record, the GL entry, the repayment file. We're funding through the core directly to the member. So there is absolutely no loan origination staff needed for these loans. So I'm going to pause there. Dean, did you want us to pause for any questions or just wait until the conclusion?
So far, nobody has any questions unless someone wants to stop now and ask Joe the question. This is very informational. It's a great product, especially if you need to, a lot of members right now, especially in today's time, really need cash quickly. And this is really a great option.
Excellent. Yeah, thank you, Christine. Absolutely appreciate that. Well, I'll go ahead and finish up. Just got a couple of other quick slides here to go through, and we can go from there. So the common loan that you're going to have out there on a day in and day out basis is what we call the life event loan. And this is life happens, something happens. So an accident, illness, repairs, maybe something as unfortunate as more month than money. And that loan will be out there all the time. But during the implementation process, we also build out two other loan types. The first of those being the specialty loan. And I somewhat alluded to that early on here. But think of these as more seasonally based loans. So we have a number of credit unions that run during the holiday shopping season, holiday shopping loans. But we have folks that do back to school loans in the late summer, vacation loans in the spring. It could be even a refund against your tax return loan if you wanted to do something like that. But these loans can be out there in conjunction with the life event loan and have completely separate underwriting criteria, interest rate characteristics, etc. So again, oftentimes when people do specialty loans, they run them for a finite time frame, anywhere from a couple weeks to maybe a month or two. But again, these loans can be out there side by side and look entirely different to be able to help folks that people that have credit challenges have life to live as well. So giving them the opportunity to get some funds that they need for some fun is also important. And then the final one that we create at the time of implementation is something we're very proud of. We call this the financial first responder loan. So think of something that has happened to the community that has had an adverse impact. So it could have been COVID as an example. We had a number of credit unions ran COVID relief loans at lower interest rates, deferred payment terms, etc. It could be an economic crisis. Maybe a major employer in the community has shut down and you have numbers of members that are out of work and need some assistance to be able to get them to their next position. It could be a natural disaster. We have had hurricane relief loans, just had a couple that ran recently. We've had tornado relief loans, fire and flood relief loans, all kinds of different situations. But because these are templated, they can be repurposed and deployed in moments. So literally, this loan could be built and waiting for something that unfortunately happens, can be deployed in 15 minutes. And if a tornado comes through or a flood or whatever the case may be, the members can have access to funds to help them with their situation in moments and be able to respond to the situation at hand. So again, as you can imagine, traditional lending, no pun intended, doesn't lend itself to this because it's not as functional, it's not as instantaneous as what we're providing. So to be able to help folks in their challenges is huge and something we're very, very proud of. Touch real quickly on benefits. We've touched on a few of these. Available 24/7, linked to funding in under 60 seconds, no credit score. But because these loans are on your core, you would want to report them just like any other loans. And so this is where the mission of QCash comes in, is this can help members to rebuild their credit and get themselves on their own path to financial wellness. And we've had story after story of how folks have been in the 500 and 600 credit score range over the course of a year or two, did a number of QCash loans, built their credit to the point where they became first-time, first-generation homeowners. Contactless and frictionless. So you have a challenge financially. You have to go into a branch, stand in front of someone that you don't know, or maybe someone that you do know. I mean, these are community credit unions, and the person you're standing in front of may be someone that you went to middle school with, and you have to say to them, I have a financial challenge, I need help. To be able to get these loans with a complete level of anonymity from a home, a restaurant, an emergency veterinary clinic, etc., is absolutely one of the biggest pieces of feedback that we get from members as to how they love the QCash platform. From the credit union standpoint, it supports your mission of people helping people, and that's never more important than when there's a financial need for your member. It facilitates financial inclusion because if you look at the average person getting the QCash loan, oftentimes they do have credit challenges and wouldn't qualify for traditional lending. So if there's not an option offered from the credit union, their need doesn't go away. So they're going to find this money somewhere. And we would far rather have them in the friendly confines of the credit union where there can be some financial assistance and some financial literacy help to be able to get them on their path. The relational underwriting means you're not pulling credit scores, you're not doing any scoring on your own. It's an automated process, fully customizable loans as we talked. The origination is automated. Our platform is supported by all of the alphabet soups, if you will, SCFPB, FDIC, even though we don't do banks, but we do communicate with them. And we are audited by the NCUA, and all of them have wholeheartedly endorsed what we do because they understand how important it is for responsible small dollar lending. And for those of you that may be CDFI designated, we are a CDFI approved vendor, so those funds that you receive can be used to offset implementation costs, as well as keeping a pool of loan loss reserves. Okay, so I want to thank you. We covered a bit of ground pretty quickly there, but I'll come out of sharing here and ask if there are any questions that you may have at this point.
If anyone has any questions, you can put them in the chat or you can unmute yourself and ask directly.
I like how you guys are CDFI compliant, because as we know, a lot of credit unions are, becoming CDFI, and this is a great tool for them to use the funds for.
Absolutely. Absolutely. And for those that have not gotten their CDFI designation, but are in that process, we are most certainly a feather in the cap for that process, because it shows the CFPB folks, if you will, that the credit union is actually walking the walk, not just talking the talk, and being able to provide some responsible lending out there.
Perfect. All right.
And Jenny did share a link for more information on QCash in the chat. So if people want to grab that to look on their own, they can certainly do that. We're going to give it one last call for questions. If anyone has anything, please speak now or email them later.
Well, excellent. Well, thank you so much for the time. I hope this was informative, hope it was helpful, and we would be happy to have any conversations that you'd like to talk further about the platform. But again, thank you for the forum, and we really appreciate it.
Thank you very much, Joe. All right. Moving on to our next presenter, we have Roman Nazowicz, and if I mispronounced your name, I apologize. And Roman is Director of Client Engagement, and he brings over 2 decades of experience in the financial industry service in fintech with a strong background in strategic growth and client development. Prior to joining Zest AI, Roman held leadership positions at QNight Financial Technologies, and his professional background includes positions with several respected organizations, including Fiserv, Catalyst Consulting, and PSCU. Roman focuses on building long-term strategic relationships which deliver value to credit unions and their members. So Roman is going to present to us today how AI-powered credit union underwriting is gaining traction in the credit union world in supporting more inclusive and efficient lending outcomes. Previously, this technology had been almost exclusively adopted by larger financial institutions that could afford it and support it, and out of reach for many small credit unions. Zest AI is going to show us how they unpack these benefits of AI underwriting for credit unions and teach you how smaller credit unions can join the revolution, become smarter, more inclusive, and efficient with their lending decisions to better support their members. Roman, the floor is yours.
Thank you, Dean. Good morning, everyone. Thank you again for this opportunity. As Dean mentioned, my name is Roman, last name Nazarevich, and yes, it's actually not the line 9 of an eye chart. That's how my last name is spelled. But again, thank you for this opportunity. So I'm here to talk about Zest AI and how we help credit unions be smart, inclusive, and efficient in their lending. Before I jump into this, I think a lot of times when people hear the word AI, 2 things might pop into their head, Hollywood, the movie Terminator, where, there's this thing running around that no one can control, or probably more closer to what people are used to hearing is, there's that little black box somewhere in a computer room that it's doing what it's doing and that no one can explain that. For the purpose of today's call, everything that Zest AI does is fully transparent. Everything that Zest AI does is what we refer to as supervised AI. It's fully explainable, and I'll get into that as we walk through. So I'll start off talking about Zest AI. So we are a technology QSO based in Burbank, California. We've been perfecting the use of our AI-driven underwriting software for over 1.5 decades now. As Dean quickly mentioned, our journey did start back then with some of the largest financial institutions in the country. You might see names there at the bottom like Citi or Fifth Third or First National Bank of Omaha. Well, those are our first customers and still are our first customers. But, how does that impact you as a credit union? Well, we were test driven. We were stress tested by some of the largest financial institutions in the country, some of the most heavily regulated financial institutions in the country. So as our technology evolved, as we've gained efficiencies through the years, it was back in 2019, 2020, where we made a big shift and started looking at the credit union space and wanted to deliver that same technology that these large financial institutions are utilizing. In 2021, we formed our QSO. And in 2022, we won the new QSO of the Year award for all the work that we're doing in this space. Today, we're probably 96%, if not more, focused in the credit union space, and that's where we're working in, and that's where we're growing. So as I mentioned, pioneering AI since 2009, focused on efficient and fair credit access to all, and it's based on the 3 pillars I'll review with you shortly. We have over 357 models deployed running in credit unions today. We hold over 40 patents across fairness, automation, accuracy, and model explainability. That's something that's very important. Before any credit union goes live with us, they receive an MRM report, which is model risk management, and fair lending testing report. So from a compliance and regulatory perspective, you have full documentation as to how the model is working, why it's scoring the way it is. That's something that's very, very important. Again, like I said, that's the supervised, that's the fully transparency, the full transparency I was talking about. So again, 40 patents across fairness, automation, accuracy, and model explainability. Where do we reside? We reside within an LOS. We're designed to work seamlessly in your lending ecosystem. So again, we have native integration with the top LOSs that are out there. We have a flexible integration to your tech stack and partners with best-in-class lending solutions. So providing technology as a service, we have unmatched service for our exceptional results. We have an NPS score of 80. We have, very proud to say, 100% credit union retention. We are fast to be able to low lift to implement in as little as 4 weeks from when a decision was made, contract signed, to go live and start scoring, and over 80 years total in compliance and regulatory experience. And again, at the bottom of the screen, those are just some of the 130 credit unions that we are serving today. So the 3 pillars that I mentioned: smart, efficient, inclusive, and efficient. First, smart. How can we help you make better credit decisions? Well, quite simply, it starts and it's all about better math and more data. The current industry score that is being used today was designed in the 1950s and built and released in 1958. You're looking at limited data points, about 20 to 25 data points in the score that's utilized today. So just imagine there's not much information you can gain from looking at 25 data points. So today, a member is just that, a 680. And for those of us who are in lending, you realize that if I'm a member, walked through the door and scored a 660, and another member came in and scored a 670, and someone else is 680, well, is my 660 any better than that 670 or 680 or vice versa? You really don't know, because again, there just isn't clarity around that. Today, we're using more data and better math. So again, that's where the use of AI and data comes into place. So today we're looking at thousands of data points, and that's really from that raw credit extract that we're pulling. And when our data scientists build models, they build them anywhere between 180 to 300 of those data points, which are the most performant ones, which give you a very large look back window so you can have a good understanding and make sure that you really can get a clear picture of a member and their score. So that's why at the bottom right-hand side, you see that a complete view of the member. Inclusive, how can we ensure all your members are getting a fair shot? Well, it starts with inclusive, consistent lending with increased access to fair credit. And how does that happen? Again, with those models that are optimized for fairness and accuracy, which allows you to be consistent and equitable. The reality is there are still a lot of loans that are being manually reviewed today. In manual review, there is inconsistency, right? A lot of times it's because people really might not be understanding what they're seeing, and there's just not enough information to make a good decision. And because of that, there's a lot of slowness that happens in lending as well. But the good news is, again, with using a model that's optimized, as I mentioned, for fairness and accuracy, you can see you can help the underserved. 40% increase in approvals across protected classes. That's more access for women, seniors, and people of color. Efficient, how can we help you deliver more decisions faster? Well, with instant decisioning due to those accurate scores and an optimized credit policy. That is something that our client success team works with every credit union on, to be sure that the policy you currently have in place will help you with the Zest solution and Zest score to really be able to auto decision, because you're getting that much of a clearer picture. 74% of members believe decisions should be instantaneous or less than a second. The reality is your members are bombarded every day on social media, television, wherever they receive their information, from fintech lenders who say, come to me and you'll get a decision in a second. They're willing to pay more points, but they just want to know if they can get that loan, and they want to know in a second. Again, over my 27 years in the industry, I go back to when I was in school working part-time very quickly at a credit union during school. We had a credit committee. I'm sure some of you remember that. They met every Tuesday night. So, I mean, we've gone away. We've gone a little bit further than that. But again, in today's world, that instant decision is not a luxury anymore. It's a necessity for credit unions. So that'll allow you to do more with less, and ultimately you will delight those members. So I have some information I wanted to share here on an actual model that's specific to the Northeast region. And show you some of the actual results that could be seen. So these are results based on a typical credit union, again, for an auto portfolio. As you can see, overall statistics, about 1,200 annual applications, about 1,010 booked loans, and 17 million in annual dollars. So as you can see through the tiers, the auto credit tiers and score, where you can gain some lift and access, and I'll explain to you how we do this as I walk through the presentation a little further. The same is true here for personal loan portfolios. You can see the statistics, about 1,000 annual applications, 600 book loans through all the tiers from A+ down to D. And the same is true for credit card portfolio. Again, 800 annual applications, about 585 booked, and the dollars from that, as you can see, again, broken down by each of the tiers specifically there. So how do we do that? So to explain what you're looking at here, this is a KS score. It is a measure of statistical accuracy of which loans will go DQ 60, delinquent 60 days in the first 24 months. As you can see, the blue is the benchmark, which is the current industry score, and the gold is the Zest. So across all three portfolios, you can see the Zest score outperforms the today's industry score, the benchmark. So again, the higher that KS score, the more accurate is the model at predicting risk. So that's what allows you, because we're getting a clearer picture. We're using much more data to get a much larger look back window at all the pertinent information that we need in order to properly score someone. Again, I might come in today and score a 650 or a 660 on a national score, but I'm really a 720. So how do we do that moving forward a little bit further? Again, the gray box represents approved by both. I think we can all agree if I came in and scored a 800 or above, or 780 or above, LTV, DTI are in place, both will be approved, right? But I think what typically happens is there is that previously declined applicants that now we could show you are low risk, that you should approve them, and those are the newly approved loans you can give to members you typically would have said no to. So as a credit union, you're still helping your member. You are able to safely go into the lower, the C, B, and C tier, where it's typically very difficult to make a decision, and really help and step up to the plate for your members. So as you can see, significant increase approvals without adding risk. This is all while we're holding your risk constant. As you could see, auto approval rate of 19%, personal of 25%, and for credit card as it goes across the spectrum. So these are the individuals for auto. You could see within each group, even in the A tier where it's not that difficult to lend, you can see there's still a lift there. But especially as you go down to the C tier and the D tier is really where the value of the technology and solutions come through. And the same is true for personal loans across the board, as you can see through all the tiers. And the same is true for credit card. So that is my presentation. Again, just to re-highlight, utilizing better math and more data, you're able to really provide a clearer picture of every member's credit score, and you can help your credit union become smart, inclusive, and efficient throughout that process.
Boy, Roman, and it's really nice because you look at those bars and you see all the loans that were approved, but AI would have approved all of that, saving efficiencies, time, the member wanting to know whether or not they get approved. That's really impressive. Now, what is your top advice you would give a credit union when evaluating an AI automated underwriting system?
Sure, no, great question. So I think it starts with, will that model be tailored to your specific region, right? Because the reality is I live in Phoenix, Arizona, our corporate's in Burbank, California, and people will transact differently in California than they do in Arizona, than they do in New York, Vermont, Connecticut, wherever it is that you live, Illinois, Iowa, right? So that I think that's very important because there are certain things you need to look at regionally, geographically that are important there. Also, can you see all of the variables that are in that model? That's what I spoke about earlier. Is it transparent? Is it fully compliant? So as I mentioned, every credit union before they go live gets that MRM, model risk management report, and fair lending testing that explains the model, how it's working, why it's scoring the way it does. So from a regulatory and compliance standpoint, you are fully covered. And how quickly can you start? How quickly can you get rolling from the decision and contract signing to going live and actually scoring?
And that's relatively quickly, right?
About within 3 to 4 weeks, you could be up and running and scoring. Yeah.
Oh, did someone have a question?
How did you do that?
I can't.
Ron, do you have a question? I don't know if he had a question or
Yeah.
if he was
If
talking
so,
to
then
someone
you can
internally.
put it right in our chat box if you want, because it was
Chat
hard
box,
to...
or you can email me at rbn@zest, so Roman B Nazarevich at zest.ai. More than happy to answer, because if somebody was speaking, it did sound very like they were on a spaceship or something, like you could barely hear them. So, but again, just to end this, thank you again for your time. Like I said, exciting what we're doing. We're actually, the credit union model of people helping people. It's wonderful to work for an organization that's actually helping to do that. As I mentioned, I think it's no longer a luxury, it's a necessity to be able to provide instant decisions on lending for your members. So thank you again for your time. Any other questions, don't hesitate to email me. Thank you.
Thank you very much, Roman. Right. One last call for any questions for Roman. You can unmute yourself or type them in the chat, or you can reach out to Christine or myself and we can get those over to Roman if you did not catch his email. I want to thank everyone for joining us today while we wait for some questions to come through. Joining us for our second part of the Small Credit Union series. We have 3 more to go after this week. This session was recorded and will be available in the next couple of days. So if you have folks on staff that were not able to join, they will be able to view the recording when it's convenient for them. And it doesn't look like we have any questions. So Christine, anything you want to add?
No, I was gonna reiterate that September 19th is our next series, and we have Synergent, TrueStage, and Posh, and we thank everybody for joining us. We know it's quick information, and so please make sure you reach out to either myself, Dean, or the people that left their email addresses to find out further information.
Right.
Christine, did you want us to
We have ShareTech. We have ShareTech.
go today as well? I know we moved some dates around, so I know
Yeah.
we're happy to go this week or not, but if you want, we're prepared to go today as well.
Yep, nope, we do have ShareTech still.
Okay, perfect.
I'm really sorry, I apologize. So ShareTech is a small, it's a core program for small credit unions. And if you would like, Joe, if you would like to introduce yourself.
Yeah, absolutely. No, thanks, Christine. Thanks, Dean. Appreciate also the flexibility on dates and whatnot, and excited to have an opportunity here to share a little bit about what's happening in ShareTech, but also we wanted to make this very informative. By having over 300, almost 300 credit unions on ShareTech for core, we have kind of deciphered what are a lot of questions that if we're in a credit union leader's shoes, what should they be asking from core and digital banking partners when deciding, do I have the right home or should I be looking elsewhere? And so myself as the head of growth for ShareTech, as well as also introduce and kick it over to Steffi Decker, our CEO, we're going to kind of just give a little background and share what some of those questions might be that we encourage you to ask your current provider, and also learn about ShareTech. So Steffi, I'll kick it over to you, and I'll pull up some slides as well here in a second.
Okay, great. Thanks, Joe. And thanks, Christine and Dean for having us here, and to this group for joining us. Joe and I talk to a lot of credit union leaders and CEOs as they are thinking about a core processing decision or a digital and mobile banking change. And this is an incredibly important decision you're going to make for your credit union. It's sort of the heart of your technology stack for your organization. So Joe and I thought it may be helpful to just share with you some of the questions we hear the most. So I think we put together kind of the top 10 questions that we get the most and that frankly we think are the most important that you should be thinking about for your organization. And if you are in a position evaluating different vendors, well, we think you should really make sure you're pressing them on. So with that, we'll jump in and give a little bit of context on ShareTech, and then happy to jump into those questions. So as Joe said, I'm Steffi. I'm the CEO of ShareTech. I have the pleasure of working with our roughly 300 credit unions and our about 180 team members across the country who support those institutions. And Joe is our VP of Growth, who really leads all of our efforts with our current customers, future customers, works with many of our product partners and vendors to really expand the capabilities for all of our customers. At a glance, just at a high level, sort of when we think about ShareTech, this is what we do, and this is how we think about what our role is in this ecosystem. And it's really to improve credit unions' competitive advantage and help them win market share. We're here to help you do that. That's what you do every day, and try and support your members and your communities. And we want to stand behind you doing that. We also want to help you heighten your efficiencies so that you can do what you do best. You don't want to spend all your time using technology or fighting with technology sometimes. You want to do what you're there to do, which is support your members, build relationships, invest in the community. The technology is there to help you do that. And so that's most fundamentally how we think about our role for your credit unions. Just some high-level statistics on ShareTech, just so you have a little bit of context of who you're talking to here. ShareTech has about 280 plus credit unions across the United States and a handful in the Caribbean as well that use ShareTech. We have about 1.5 million members who are using ShareTech home and digital banking solutions as well across our institutions. Customer satisfaction is something we spend a lot of time focused on and prioritizing. Our average customer satisfaction score is 9.37, and we have a whole very large team dedicated to ensuring that our customers are using the software to its fullest and having a really positive experience. The reason that we're able to do that so well, I think, is because we have a long history in this space, serving credit unions as small as 25 million in assets, all the way up to 300 and above, with, as small as one branch up to dozens of branches. And so we have a long history of doing that from when ShareTech was founded in the early 90s. Uptime is very important for your organization. And I think, the last piece here is around, again, tied to the customer success piece of just having a really supportive, engaged team that is going to help your teams, again, use the software. And one of the many things we measure, and we'll talk more about measurement in sort of the question section, but is our first touch time. And so we pride ourselves that for our customers, if they have a problem, someone on our team is going to get back to them within 15 minutes. And if it's a very highly urgent problem, it will be much faster than that. But overall, it's less than 15 minutes. So with that, just with a little bit of context there, where we wanted to go with this is just to give you some questions. If you're thinking about a core digital banking partner or a new partner, some questions and ideas to think about as you approach that process. And we've really bucketed this in two big segments. One is just this partner versus vendor mindset. And this is fundamental to how you approach this process, which is really, do you want a partner or do you want a vendor? And there's validity to both of those strategies, but really getting clear for yourself and your organization. Are you looking for a partner who's going to grow alongside you and help you grow and be invested in your organization? Or are you going to look for someone who's just going to provide pipes and provide software, and you're going to do all the rest? And that's important to get clear with your organization. And then the second piece is just around growth mindset. If you want to grow as an organization, I suspect you want your partners to be growing as well. And how are they thinking about growth, and how are they thinking about enabling your growth? So those are really the two big buckets. So I think Joe's going to kick us off with some questions.
Yeah, no, thanks, Steffi. So I think what would be beneficial is I'm in the partner vendor bucket of the two buckets Steffi just described. I'm going to ask Steffi the questions, ask as if I was a credit union leader, and hear both not only what Steffi's answer would be from the ShareTech side, but also maybe some core beliefs of why that's an important question to ask and what we've seen in the marketplace. So, with that in mind, Steffi, you talked about ShareTech and the growth they've had and whatnot, but what are the values that drive that? And really, how do you evaluate success and why should I care about that?
Mm-hmm. I think one of the key words Joe used was values, and that is, it's important to ShareTech, and I think it should, as far as I can tell, it's probably very important to your organizations, and it is something that you should be inquisitive about when you think about either a partner or vendor, because especially in a core banking relationship or a digital banking relationship, you're going to be stuck with it for a while, and you want it to work and you want it to work well. So really understanding the values that that organization lives by, because you're going to see it. If they don't have the right values, when you call for support, when you deal with their technology team, when you deal with their sales team, if they don't have values that align with yours, you're going to see it and feel it the entirety of your relationship. So I would really encourage you to press on that organization around their values. For ShareTech, we spend a lot of time thinking about this and talking about it, the values that define ShareTech. And this was one of my favorite exercises coming in as the CEO of ShareTech, was to really unpack what values we live by at ShareTech. And those are to be bold, powerful, and caring. And at least when you deal with our team, I think you will see that pretty consistently across the whole scope of our organization. And we try and bring that lens to everything we do. And then we evaluate success very regularly. The key metrics that we look at and measure on a quarterly basis, and sometimes more regularly, are customer satisfaction. We measure customer NPS, and we measure employee NPS, are sort of the highest level measures that we look at on a very regular basis. And we get both a quantitative read and a qualitative read to really determine if we're showing up and living true to those values, both from our customers and from our employees. I think both of those are really important metrics to see.
Awesome. No, thanks, Steffi. I think one piece of being in the seat of a credit union leader is contract management, to get kind of logistical in the weeds, going from values to that. But I'm curious, what is the philosophy? Are they coterminous? How does that look like as it relates to core and digital banking?
Yeah, I mean, I know we have a lot of CEOs on this call. I think we can all agree that our favorite parts of our jobs are managing contracts. Why we all got into this work, of course. I'm only kidding, but it is important, and managing contracts for your vendors and your partners is an important part of what we do. And so for ShareTech, in offering core processing solutions and digital mobile banking solutions, it happens to be something that comes up a lot in this selection process. And as we work with credit unions, they often find a mismatch between their digital banking and their core processing in terms of when those contracts terminate and the ways in which they can get out of them and make a change. And it ends up often handcuffing them into a solution that they don't want. So certainly for us, we make these contracts coterminous so that you have more flexibility, because those are so interconnected and you need to have that portability and flexibility. So it is something you certainly should be, and I'm sure many people on this call are keenly aware of their contract dates, but as you think about that with new vendors, making sure you're lining those up.
Great. Part of vendor versus partner most readily shows up into the communication, both in person and virtually. How often should I expect to hear that from ShareTech?
Yeah, you hit it on the head, Joe, that this is, I think, one of the key dynamics around this partner versus vendor standpoint. In general, I would think as a vendor, sort of more on that vendor side of the spectrum, you probably wouldn't expect to hear from your vendor that much. It's probably only kind of very responsive and not particularly proactive. I think from the partner lens, which is certainly what ShareTech prides itself on being, in our case, a customer, any of our 280 plus customers will hear from us very regularly, whether from our customer success leader, with all sorts of training tips or ways to use the system, having people sign up for webinars, or even our team going on site, or credit union teams coming to our headquarters to learn, to train, and use the system better. You're going to hear from our growth team on all the new products that we're rolling out on a regular basis as we're continuing to innovate both our digital banking solution and our core processing. You're going to be hearing from them monthly and more frequently from that for new products that are available to our credit unions. And you're going to hear from our technology team all the time on big changes that are improving reliability, processing speed, all the things that are important for you to operate your system. So as a partner, we think it's really important for you to hear proactively from our organization on where we're going and what the roadmap looks like. And I think for you all, as you look at different options that you have, understanding what you should and shouldn't expect from that organization is critical in this process.
Okay, we do have a question that came in
Okay.
Yeah.
regarding the core processing. Does ShareTech support mortgage loan servicing in investor reporting?
So short answer, sure, yeah, absolutely. So short answer is yes, we do. We on the mortgage side enable that, where we have some credit unions that utilize our solution for both originating and servicing mortgages, but also we bring in third parties as well for best of breed, either via open API or with partners that we've already established relationships with. And so happy to double click into that later, but absolutely. The answer is yes. It just depends on the level of sophistication and what you're trying to accomplish.
Okay. And we just had another question pop in. Does ShareTech support soft pull codes for credit?
Oh, support. So, I mean, depending on which vendor, absolutely. So it's one where I need to understand which who you're with for that, but absolutely. So our core, one of the things we'll talk about here in a little bit too is fully integrated core digital banking seamlessly. So even as it relates to members, from the palm of their hand for applying for loans and whatnot, and being able to have that ability right then and there and have the soft pull and all that, it's enabled.
Okay, thank you.
Yeah. Great questions. We're adding to the question list. This is great. Steffi, next question I had for you was around KPIs and customer success. I think it's one thing to say you have, good customer support, but what are the watch outs, or I guess really at ShareTech, what's the philosophy on how do we measure that?
Absolutely. I think getting the data is so important when you're looking at these different partner opportunities or vendor opportunities. So for at ShareTech, we run a very tight metrics regime on our customer support because it's so important that we are serving our customers well and holding our team accountable to doing so and getting good feedback from our customers on that. So at ShareTech, we measure first touch time. We measure, so when you file a case or you call our team, what is the gap between when the time you call and the time you hear from our team? We measure case resolution time and making sure that cases are getting closed in a hyper timely fashion, whether that's measured in minutes, hours, or days, but really keeping an eye on the different types of cases, whether it's a critical system issue, a member facing issue, or more of a training problem. We measure those all separately. And so keeping a really tight eye on that. And then we measure satisfaction, as I said, on a very regular basis. And then case resolution, sort of quality of resolution, we also measure that to make sure we're not just closing cases, but we are doing so at a high quality and caliber so that our customers feel like should they run into this problem again, they know how to solve it themselves, or at least are better off than they were an hour ago when they filed the case. So we're keeping a very tight eye on that.
Great. We talked about core processing, we talked about digital banking. We've had some questions about that, but I'm curious, do you inform other parts of my strategy beyond just what's kind of considered typical in those realms?
I think, again, this gets at this heart of, do you want a partner or a vendor? For us at ShareTech, we think this is important. We want you to grow as an organization, and we're not succeeding if you're not growing. So that's what we're here to do. So one of the functions we provide at ShareTech is we have relationship managers and account managers who are going to work with each of our credit union customers. And one thing we love to do is come together and kind of co-create a strategy in partnership with the credit union. So we need to understand what are the credit unions' strategic ambitions, whether it's a 1-year time frame, a 3-year, 10-year, whatever horizon they are planning for, and map against their goals and strategies our own product roadmap and our own strategy to make sure that we can help the credit union grow and meet their goals. And the credit union also knows where we're going, so they can plan around that. So that's a process we do regularly, whether it's quarterly check-ins or annual check-ins, sort of strategic road mapping with each of our credit unions. And so you definitely, at least from the ShareTech's point of view, our strategy and the credit union strategy will certainly be commingled on a regular basis.
Great. Well, and one example of this, I can't help myself to give a quick example of this. Right now, we are working with experts from FedNow that have rolled out a best-in-class FedNow solution, and not counting on you to have to be the only expert. We're seeking feedback from our credit unions, but also from the experts that have helped create the best instant payments and FedNow solutions out there, so that we can co-create what good looks like there. As well. And so that definitely goes beyond core and digital banking, but something we believe it's what we need to do to not just help you compete, but win. Steffi, last question for you before we go to the growth mindset. Who are your customers?
This is such a foundational question that I'm sure you all are keen to ask your partners and vendors, but just understanding that the partner you're talking to has customers like you and wants to go where you want to go. So if you want to grow, they're also growing, and understanding who their customer base is and talking to some of their customers as well. I think that's, vendor management 101. I think you all know that on this call, but having a good base of customers, a long-standing base of customers who really believe in that provider is so critical.
Awesome. Yeah, as one of the reasons what fired me up so much about coming to lead growth at ShareTech a little over a year ago was my parents instilled me 2 things when I was growing up. Number 1, buy American cars. Number 2, do your banking with the credit union. And one unique aspect about ShareTech is they only serve credit unions. And to have that kind of mindset, it comes through with that caring value and ultimately helping, again, credit unions not just compete, but win. All right,
Great.
Steffi, you're off the hot seat. You can start asking questions.
Okay, well, let's definitely talk about growth. And I think even getting into some of the product, I think the questions that were coming through, and please, if anyone has more questions, I think the product and capabilities is hot on people's mind. So first question is, do you have a growth strategy that enables my credit union and your company to grow?
Yeah. I mean, there's 2 parts to this question. That's why I think it's such a powerful question. Number 1, most importantly, to the credit union, ShareTech, well, yes, we're going to deliver a bold and powerful web-based core. Our mindset and where our growth strategy is focused on is around both the member-facing experience and data. As your core and digital partner, we sit on a wealth of data to help you better serve your members, and we better be sure we're enabling you to utilize that at minimum with strong, great reporting. But beyond that, how do you better potentially cross-sell great opportunities for your members to enhance their financial lives? But then also the member facing, it needs to be everything that the member touches, especially from their digital banking, needs to be, again, bold, powerful, and a semblance of caring from your partner. The second piece of this is really important because there are a lot of core and digital banking partners out there that are not growing. And we find that a lot of the credit unions that are choosing ShareTech are very nervous about the current state of their current partner because of that fact. ShareTech this year, we're really fortunate that a lot of credit unions, this is where they want to spend their home or make their home for their core and digital banking partner. We've had 22 credit unions, and just in this year alone, sign ultimately to come on board to ShareTech. Whereas many other cores in digital banking, if they're declining, what's the level of investment and are they growing? And it kind of ties right back into the first part of this question. So 2-parter, very important to ask.
Awesome. Very closely tied to that, Joe, you were getting at that was around this product roadmap piece. If a credit union wants to grow, they got to move along with the times. And we heard from some great providers here today, kind of new to the market, bringing great technology to the market, but they're also reliant on often the core processor or the digital banking partner to integrate, to bring those technologies to market. So
Mhm.
tell us a little bit more about this question, which is, do you have a transparent product roadmap and how is it formed?
Yeah, yeah. A core digital banking partner that cannot readily display a roadmap. Number one is troublesome of how is it formed, which is the second part to your question. We believe that quarterly we need to be able to adapt based upon the needs of our credit unions. I mentioned FedNow. FedNow is now the solution that we're co-developing with a partner is going to be is happening already, and it's one where we need to be able to deliver it ASAP because instant payments are here and they're here for the long run. And so we have to be adaptable but transparent. I brought our digital banking roadmap, one of the latest iterations here. This is something where any of our credit unions that want to see it, they can see this at any time. And beyond that, we have regular focus groups that help inform this roadmap. One unique call out about ShareTech as well is we have Savvy Money on here. We've been partnered with Savvy Money for a long time, but that is a further enhancement to our current integration so that it's even more optimized for your members. This is something that we, again, love to get feedback on and love to showcase and share. And I think it's critical to make sure you have a partner that does that as well.
Obviously, credit unions care above all else about the member experience, right? That's what we're here to do. So what should credit unions be thinking about when they're looking at partners and vendors thinking about their own member experience?
Yeah. Well, one unique aspect about ShareTech is that our core and digital banking are fully integrated. So it's not you have two different products that you're trying to match together. The data isn't seamless, which hurts the member experience. And so in order for that to be seamless, we believe at ShareTech it needs to be intimately tied together, like we have in our solution. What that enables is, for example, for a seamless and frictionless member experience, its account opening needs to be able to be done from the palm of a member's hand and have the KYC and instant account funding done right there. You have the momentum. Let's not lose the member because they have to come into the credit union in order to fund or whatever or whatnot. Same thing with current loan application. I loved what QCash was saying earlier. Being able to do that from the palm of your hand instantaneously for all types of loans has to happen. And so those are the kind of things that when you double click into a frictionless member experience, ultimately that's what it comes down to, and where the question should lend itself.
Great. And then this is so important, of course, member experience is critical, but the hiring market today, we all know as leaders of organizations, it is hard to hire great people. It's hard to retain them. It's hard to train them. This is so important to really understand because they're going to be using this technology day in and day out. How does this solution help recruit employees and retain employees for these institutions?
Like you said, it's for myself. So again, with leading growth, my team has all the sales and marketing experts across the country are on my team, and the number one thing they hear about is this. And I was lucky enough to be on site with a credit union about a month and a half ago, and they were looking at our web-based core and seeing a demo of what their credit union could potentially get. And the number one, and a quote of somebody sitting next to me, of an employee of that credit union, turned to me and said, I might not actually quit if we convert to ShareTech. And again, agnostic of the fact of how proud I was in that moment of what we were trying to do to help enable. It was eye-opening in that, retention is huge. And if you have a software and a technology that looks like it's from the 90s, you have somebody come in as a new employee using it, that's going to hurt their satisfaction. It's probably going to make them feel like also that they might be trying to serve a member with one arm tied behind their back. And we at ShareTech believe that we are supposed to be helping you go on offense and not playing defense in order to help you grow. And that starts with your employee base. ShareTech does such a great job of taking the net promoter score of our employees into account, because we firmly believe if our employees are thriving and happy, then our customers will be. And I believe you as well are probably have similar mindsets, at least the ones I've talked with. So that's the 10th question. These are very high level. You could spend a half hour on each of these, but these were the ones we really wanted to double click into, and we've seen be very impactful for credit unions to ask when they ask us, when they ask our peers. And we wish you luck on your core and digital banking processing journey. And we are more than willing and excited to potentially have a conversation if this is something of interest to you as well. But we'll also open it up to Q&A at this point if there are additional questions for us.
Well, thank you. We really appreciate this information, and you really pointed out some really strong points about how important it is to get a core provider, like somebody who, is there talking to you all the time, because it is important for you to know what our credit unions are in need for so that you can put that on your roadmap as well.
Absolutely. Absolutely.
And does anybody have any other questions? It was very insightful. Very helpful to our credit unions. It was nice to see a lot of questions asked. And again, this is recorded, so we will be getting this out to our credit unions. I know some people had to leave probably to take care of lunches because, as you know, small credit unions, they wear many different hats. And next week we will be having another series, and we will have 3 people, guest speakers, and we thank everybody for their time.
Thank you,
Awesome.
Joe. Thank you, Steffi.
Yeah. Thanks, Dean. Thanks, Christine. Thanks, everybody.
Have a great
Thank you.
afternoon, everyone. Thank you.
Bye-bye.